Hi folks, Nick here. I wanted to look at Bidu. They reported the last couple of days, market did not like what they saw, big gap down. So the good news is that hits exactly my box that I drew based on this purple complicated head and shoulder look. And for me to see that, I would have to zoom out to a 2-year look. So let's do that. Whoops, I don't know where that came from. Okay, let's do that. Let's go to 2 years. Boom. All right. So Bidu is one of those, Chinese companies that has an ADR here, so we can trade it here freely. However, it does move with China markets. Obviously, it is tied to China. So why did I choose this purple box at the time? Because it looks like a head and shoulders, and I've explained it several times. It may not be perfectly head and shoulders, but it squawks like a duck. Also, if I extend it this way, you can see that resistance, 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 and then broke through it, used it as support, used it as support, used it as support, used it as support, and then finally did not hold. Support broke. So this is the eyeball target of that. And, technically it's probably a little bit lower, so leave room for a downside. So what now? Now I see that price is right in the middle of these two red lines. This is a consolidated area, a few months at least. Legitimate pricing. However, look at the volume. This drop was on huge volume. The fact that today is flat is somewhat good news, but it still leaves the door open for more pain to come. Left alone, I think Bidu is trying to find footing. Today's candle looks good. It had a lower low that it's shrugging off. Now it's half as bad as it was this morning. I'm sorry. Yesterday's candle ended up being half as bad as it could have been. Today's candle is a little bit green, flat. Let's call it flat. So it's trying to find footing, and it wouldn't surprise me if it found it here because this was a resistance area before. So it better serve as support here, or lower it goes. If Chinese markets go out tomorrow down another 8% or 5%, this will be down again probably. So whatever I'm saying here, please pay attention to the fact that I would go long it today if it weren't for the Chinese market's big question mark. Okay, so that's my caveat. All right, so also Yellen is going to say something in a few minutes here. But that aside, I'm going to look for a few credit put spreads. And the first one, which is the most aggressive one, would be doing a credit put spread for August expiration. And it would be at 150, 152, 152 and a half, 150. That is the most aggressive one. So let's build a box right here. And it's for August. Aggressive because it's right here. That's just one candle away. Basically another candle like this one, which, yeah, it was a huge candle, but one candle like this one, we'd be in it. And it pays 23 cents. So I'm collecting, if I do 10, I'm collecting $220, but my risk is, in percentage-wise, in dollar-wise seems big, but the yield is not bad. And it's about, I want to say 10, 11% yield on money at risk. So the yield is attractive for the next 20 days, but it does put you in danger. I don't like that because then I'm at the mercy of Chinese markets, and if we had another bad candle, this starts accumulating losses right away. So I'm not in favor of that. But I wanted to share it. I do have a lot of aggressive traders out there, and they may like it. The other one is slightly same time frame, but a little lower yield, a little lower reward dollars. So the other one is, I'm going to stagger it a little bit this way, 150, 148. So the other one would be 150, selling the 150 put and buying the 148 put behind it. So that pays about 13 cents. The yield is about 7%, 6 to 7%, 6 to 7%. And so lower yield. If I do 10, I'm collecting $130, but my risk is a little bit smaller dollar-wise. And more importantly, I'm a little further away from trouble, so I have a bigger buffer. So the price can fall, what is it now? 168. 150 is 18 bucks. That's another 10% drop from here. So Bidu would need to drop another 10% for me to be in the money. So it just gives me a little better breathing room, okay? $2.50. So I favor that a little more. I even favor something a little more, more conservative, less aggressive. How about something, let's say, September. So I'm going to stagger it down here. And September 145, 140. I already like it better. So 145, 140. Yeah, it's $5 wide, but it also gives me a bigger buffer from current price. So this is 150, this is 145. So we've got another $5 of buffer additional. So over 168, that's another almost 3% of buffer. So this one is almost 13% price buffer from current prices. So already it's more conservative from the standpoint of incident. However, much bigger dollars at risk. Here I'm benefiting 40 cents, 38 cents. I'm collecting, so if I do 10, it's $350 or $400, but the dollars at risk are like 4,500 bucks. So if it loses completely, so if price falls down to here, I'm risking $4,500. So the yield may still be attractive to a lot of people, but would scare a lot of people from going into it. So the yield is like 7%, maybe a little bit more. But the dollars, which is fantastic, but the dollars at risk are a lot bigger. So how can I do this a little more conservatively? I can go out to October. I'm going to duplicate this one and go even lower. How about 35? If I go to October, notice I'm moving them, this one to September, this one to October, 135, 130. So October 135, 130 pays me 30 cents. So the yield is still about 6.5 to 7% mental math here, air math as they say. The dollars at risk are still about the same, maybe a little bit more. So if I do 10, I could like $350. Dollars at risk are about the same, but now the chances of a loss have gotten slimmer. Why? Because now I have a 135 minus 168. I have $33 of the price buffer. That's almost 20%. So the price has to fall 20% from here for me to be in the money. It is doable. It is feasible. A debacle in China, a rate hike, all will bring you down to here. But look at where we're at. I mean, this is 2 years worth of work of Bidu. Okay, so it depends on your fundamental thesis on Bidu. My fundamentals are okay. It might be well managed. It's well established. They're basically Google over there, so they do print money in some sense. They've had a few miscues here and there. Now they want to tackle Amazon head-on with the web services, so we'll see how that comes out. That might mean that they're going to spend a little more money. But, after a punishment like this, maybe trying to catch a falling, I don't want to go further than October because I don't want to capture another earnings report. Yes, I can go out to December and go even lower, but then I would have to sweat an earnings report. I do believe they report at the end of October, which would not include the October expiration. So these are thoughts on Bidu. Now, there are some people that are really aggressive, and they can go out to October and go to the 140. So if I duplicate this one and move it up right here, so this box right here pays 45 cents versus 30 cents. But now you've erased $5 worth of buffer. I'm not sure it's worth it. So it all depends on how you're managing your portfolio. I have a few people that are short China. If I'm short China, going long Bidu is a really good hedge for short China. Because if China bounces, my short China is going to lose money. But if I'm long Bidu, that trade is going to gain money, so it'll offset some of the losses in China. So it all depends on your overall portfolio. There is no rush to get into any of these trades. I have not taken any of these trades for myself, although they all qualify for my taste, except for this one. I don't like it, just because I put myself at the mercy of, I'd be sweating the next open just because, and something I can't control. I don't like that. I like to have some control. This one takes away time control from me because there's not a lot of time. It takes away distance because there's not a lot of buffer, and I'm not getting paid buckets for it. So what's the big deal for that one? So this one is the least attractive. This one is somewhat doable. The dollars at risk are in check. The reward is still decent. The period of time is still short enough. This one is good. This one is okay, just like this one, but a lot more time on the clock. This one is best from the sense I will set it out there and I won't sweat the next open, knowing that I have 20% buffer. I will sweat the dollars at risk over this one. So this has benefits psychologically. This one has benefits psychologically. They are both equally comfortable for me. This one least attractive. So if I was to rate them, I'd say 1, 2, 3. This one 4 maybe if somebody twisted my arm. I'm not short China, so I'm not inclined to take this one. All right, so these are my thoughts on Bidu. This is to show you how I approach things and what I don't do. The other thing I don't do is I don't do a credit call spread. First of all, this thing runs forever when it decides to run. Plus, all of this big drop pretty much erased all the premiums that are up there. So for me to get a credit call spread, I'd have to get to here, which is like 2 candles ago. I'm not comfortable doing that. If I'm nervous, I'll do this one, and then if I get nervous, I'll buy a small debit put spread to withstand any heat over the next few days if I'm worried about it, but it'll be a rental. If I buy them, I sell them right back. All right, so these are my thoughts on Bidu. If you have any questions, if you don't know what I'm talking about, please let me know. I usually show you orders, so let me show you one of them. Don't worry, this is planned. Here's the October flavor. We're looking at this one right here, folks, the 135, 130. So to open, forget the 10. That's just up to the individual. This is October expiration. I sell the 135 put. That opens risk. So I'm selling the 135 put. That opens risk. If I don't do anything else, I can collect about 90 cents. So if I do 10, that's 900 bucks. Whoo! All I need to do is Bidu to close above 135 between now and October, and I keep 900 bucks. But that is highly, highly unrecommended because A, it requires a lot of margin because you're taking unlimited, well, not unlimited, you got 100%. It could go to 0, and therefore it costs yourself $135 and per share, per contract times 100, so that's a lot of money to lose. So the platform will require you to reserve a few bucks against it, so it'll be a lot of money against it. Second of all, it's just not good practice. Long distance, if you want to trade a long time, this leaves you open for massive losses that could wipe out accounts. So this one opens risk. I do the opposite, and I buy the 130 put, same time frame, and this one limits the risk, and for this, I collect a net 30 cents or 29 cents. This is the mark. I don't look at bid and ask because they really don't tell me much. I want to pay that, thereabouts. So I usually start at 35 or 40 cents, and I wait, and then I drop it a couple pennies, and I wait, and I drop it a couple pennies until it gets to about 29 and it's fill. If it doesn't fill, maybe I'll take 28, but any lower than that, I'll start second-guessing myself. Forget this number. This is a very misleading number, market number. Mark, middle, mid, whatever they call it. It's basically the mathematical bid and ask average. What's bid? What's ask? Take the middle. That's what that is. That is the fair price. This guy is asking this much. This guy wants to bid that much. The middle should be the fair price for it. All right, so that's the one flavor. The other flavor is this one, and it would look like this momentarily. Again, the count is up to the individual. This is August flavor, and that's this box right here, not this box. I sell the 150 put to open risk. I buy the 148 put, so now it's $2 wide. For this, I'm collecting 13 cents. So 13 would be 13%, 14, 15%, so 7.5% air math. Yield, 13 sounds piddly, but it's 7.5% yield in how many days? 20-some days? It's not bad. That's do it twice and you beat the S&P. This year the S&P is 1.5%, I think, up for the whole year. So it's not too bad. All I need for this to be successful is Bidu close above 150 in the next 20 some days. But it is close to it, you know, so you weigh the pros and cons. Again, if you have any questions, please let me know. Nick, signing out.